Hello everyone, welcome to episode 33 of my cryptocurrency investing series. And in episode 24, we had started with decentralized finance and how you can earn passively with your crypto rather than just trading it or holding it. When you're holding your cryptocurrency, how you can earn passive money or passive income with your cryptocurrency. Now, today we'll be looking at how much money can you actually passively earn with your crypto and what is the potential and how you can safely do it. I mean, there are a lot of options to earn passively if you've been following my cryptocurrency series on decentralized finance. But how can you do it safely, especially in avoiding impermanent loss, making sure your initial investment is safe, and what are the tips and tricks and some of the strategies. So as usual, starting with a disclaimer, I'm not a financial advisor or an investment expert. I'm only doing this based on my own personal experience to understand or to make you understand the process or to explain the process in the way that I have understood it. Also, never send your money to professional brokers or so-called professional brokers or investment advisors. Most of them are frauds or scammers who are after the money. So your money, you invest it. So let me start off with an example because this is a typical question, right? How much money can we actually get in decentralized finance as a passive income? So I'm going to use one example like I always do. I'm going to use a personal example to show you how much you can earn. So I invested about $9,000 into a crypto, and that was my hodl crypto. That was something that I had invested for growth potential. Now, out of that, I got a passive income from about $9,000 of investment. In just 30 days, I got about $1,500 with zero risk of impermanent loss. So instead of liquidity pool mining, where you're providing it into a liquidity pool, I did a single asset yield farming, cutting the risk of impermanent loss totally, which I had explained in episode 24 and 25 with examples. Now, so that my invested amount is safe from impermanent loss, and it is a hodl, as I always said. So, but the amount of money that I was able to earn in a month or less than a month was about $1,500. So we will look into how we were able to do it and how what crypto that I was investing and what kind of yield farming I was doing in a bit more detail. But before that, if you want to follow me on Twitter, my Twitter handle is @Chennai to London. People have been asking me to create a closed group or a WhatsApp group. I haven't created a Telegram group or a WhatsApp group, but I'm active on Twitter and I always share updates about new cryptos that I'm getting into or new portfolios that I'm getting into. So if you want to follow me and if you don't have a Twitter account, it is a very quick process to create a Twitter account, and it's easy to follow not just me but also many other people because you get a lot of information from about crypto in Twitter. The basic investing strategy in crypto, right? So let's just refresh ourselves from episode 1. If you've been following me, what we've been doing is we've been looking at crypto to understand that there is an intrinsic use case for the new projects that are coming up. And we researched and identified these cryptos in an early stage where they have a strong technical team and a strong idea behind it. And by investing early in those cryptos, it is just like a share trading where you're investing in a company in its early stages with the expectation that it's going to grow up. So by investing early, we have seen most of the time that we've seen that we get profits of 200% easily in like a few days time, and even 1000% in a couple of months or a few months time. And in some cases, we've been seeing exploding growth. For example, WRX is a currency that I mentioned in episode 3 about WazirX, which was about 5 rupees at that point of time, and exploded to about 400 rupees in about 5 or 6 months time from September last year to this year, and it was about an 80 times growth. So if you had invested about 5,000 rupees into WRX, like I had mentioned in episode 3, you would have got probably about 4 lakh people, like many other people who had commented on my channel saying that they had invested that kind of amount and now they're sitting at a very high profit because of the value that it had gone up to. That's the foundation of crypto investing. So we should never forget the fact that we are in crypto not because of blind luck or not just blindly to follow up crypto. To make sure that we understand the project that we're getting into, and the fact that because we are getting into a project at an early stage and there is an expectation or a potential for growth. But we also saw that there was an 80-20 rule that I had explained in episode 15 where how you can realize profits on a frequent basis. Because the reason is, if you keep your cryptos just sitting idle and while waiting for the price to increase, there are always fluctuations that happen in the market, and especially the volatility of the crypto what makes it special as well. So how to use that volatility or how to use that price fluctuations to your advantage is what I showed in episode 15, where you can take 20% of your crypto and you can keep realizing profits over and over again in a cyclical and repeated fashion. I had even shared an Excel template that I am using and shared it freely in that episode, in episode 15, and I explained in a detailed demo how you can make a decent amount of money. A lot of people had given feedback even on that video that they've been following that process diligently and they've been making a decent amount of money regardless of how the market is doing. But to do that, to do what I explained in episode 15, you need a lot of time invested. I mean, you need to be looking at the charts much more closely and you need to be following the prices on a much more closer basis. But if you still want to take interim profits and you don't have that much time, that you're not able to follow it that frequently, that is where decentralized finance comes in, where we all know that investing in cryptos come with an inherent risk, and volatility is pretty high, that we've seen a big market crash in June and July this year. So to cover part of that risk by putting it into a passive income, or putting it into a process where you get a passive income on daily basis, on a weekly basis, monthly basis, you are having liquidity, or you're able to take out liquidity from the crypto. And this, if you're able to do it on a daily basis, and you take part of the money out, or you can reinvest part of the money as well. So you're also able to do dollar cost averaging when the market is actually doing, or it's going down. So the profits that I was making from decentralized finance, part of it I was actually reinvesting it in the market crash, so that I was able to buy more of the cryptos that I was investing in, and then that gives me a cyclical profit. So how much did we actually earn in that process? Like I said, $1,500. What crypto was it? So it was Cake from PancakeSwap that I had explained in episode 25 in detail, and how to get yield out of PancakeSwap. So Cake was already one of my HODL tokens. I mean, I've been highlighting my top 6 or 8 tokens, and Cake was one of it already. But instead of keeping it idle and instead of putting it into a liquidity pool where it is going to give me a impermanent loss, I put it into a single asset yield tool. So you can see here as an example where I had 380 Cake, which was roughly about $9,000, and I harvested about 318 C98. C98 is a coin that I had highlighted in my Twitter as well earlier this month in August. So you can see it in PancakeSwap as well, that I have invested about 380 Cake, which is roughly about $9,000 in today's value. So on an average, this was roughly around this month. So I'm just going to assume that the value was that. And right now, unharvested C98 itself is about 1.3 C98, about $6.39. Now let's just take that into a calculation and see how much I actually made with that C98 that I harvested. So 318 C98 in today's average price of $5 is about $1,590. That's a return of investment of nearly about 209% APR. But how is that possible? Because in PancakeSwap, yield farming APR was only about 70%. The reason is we research in the project that we are going to invest in, even for yield farming. So you don't, PancakeSwap has got about 15 or 20 different projects. You don't put it into a random project. You research on which one is likely to increase in value. So initially the C98 price was about $1.1. So when we were yield farming initially, it was growing or accumulating at a higher pace because the C98 value was only $1.1. So later when it grew to $5, or 318 C98, which should have technically been about $320, is now about $1,500 because of the fact that it had a exponential growth as well. So that is how we invest. So we not only got the C98 tokens cheaper because it was initially, it was at an initial stage, we also were able to sell it at a higher average price. I mean, obviously now it has come down to maybe about $4.5, but that's what you do. You invest, or when you are doing yield farming or when you're doing passive income, you research the project that you're going to invest in, not just putting Cake into a random yield pool without knowing anything about the currency, or where that new token could actually even go down in value. So we research on that, and I had even tweeted about why I'm investing in C98 early in August and what is the advantages of putting money into C98, for example. So that is how you choose a liquidity pool. Now, before we go further into choosing a liquidity pool, we should talk about how not to choose a project, or how not to choose a liquidity pool or a investment, because this is the most important part of investing, that we need to stay safe. So I had explained in episode 19 about my top 5 investing tips, how to prioritize safety before profits. Always safety should come before profits. So there is no point in chasing 10,000% or million% APR in DeFi projects, which are, you will see it a lot in both Polygon ecosystem and the Binance Smart Chain ecosystem. You will see 10,000%, million% APY, for example, in many DeFi projects which come up new. But these are because these are mostly scams or ruggable smart contracts. Ruggable smart contracts are what I call as honey trap in my previous episode, in episode 32, where they offer you a very, very lucrative benefit, but the intention is that they are always going to steal your funds and run away. So these are like, in India, most commonly in South India, for example, chit funds are most common, where they collect money from 1,000 people or 2,000 people, and when they have collected enough money, they actually run away with the funds. The initial 10 or 15 people might benefit, but after that, basically, they'll just collect all the money and they'll run away. So initially, they would have given so many lucrative benefits, and that's what these liquidity firms are also doing, or these honey traps are also doing. So in episode 32, for example, when we were selecting 10 fee, which we eventually invested in, we saw that a few of the projects were offering like 150,000% APR, 50,000% APY, and higher percentage APY than the one that we selected. But we still did not select them, and we went for a lower yielding firm. Now what I'm going to do is I'm going to go back to those examples where we did not select them, and we're going to look at why we did not select them. So we had gone into Beefy Finance that day, and in Beefy Finance we had tokens like Bear Finance or Bear token, Honey token, and Quant token, for example. So let's just take a look at Bear Finance token. If I click on buy token, it opens up the import token option where you have the BSC scan token tracker page. In the token tracker page, the first thing that you look for is the official site and social profiles. So here in Bear token, they have a honeyfarm.finance. And the first thing when you click on it and you go in there is notice that the price is too high. It's about $290. So anything that is above like $50, for example, first thing is that's starting to give an alarm for a new token that is so high. It's not an established token. So if you click on the audit, they say that they've been audited. Click on the audit, and you can see that the audit clearly says that there is some risk, for example. And if you read about the audit, they are clearly saying that it's using a lot of strategies, and they were not able to verify whether there is any hard drug or not. So even though they were audited, the audit result has not been that good. So this is what they factor in, that because if they're not audited, nobody will actually look at it. If they have an audit, and even if the audit is not a pass, if they just put the audit result as a badge of honor, nobody is going to actually, not many people will actually go in and read the audit, but you have to go and read the audit, at least the summary statement where everything that is talking about is not good news, because there's 4% deposit fees and there's high percentage of tax that is built into it. And also when you go back, there's layered farming. Layer 1 is honey and layer 2 is bear token. So they've already introduced one token, and they've introduced another layer of token. And this layered farming is basically a classic case of honey trap, where after introducing one token, they introduce another token, and just keep going on because they can keep minting more money. And if you look at the price point, finally, it has come down from about $4,400 to about roughly about $250 in a span of 2 or 3 weeks, which is like a drastic drop. So that all of these are alarming factors to say no to honey farm or no to the bear and honey tokens. Let's go to Quant token. So again, click on Quant token and then click on the view on BSC scan. First thing is, you notice that on the token tracker page, there is no social profile. There is no link to Twitter, or there's no link to the website, or there's nothing basically. The token tracker page does not show any social profiles. So we'll do a search because we know it's on Beefy Finance. Beefy Finance would have introduced them. So we do a search on Quant, and we can see that there is a stable Quant, or there is a Beefy Finance introduction for them, and you can see that there is a Twitter handle for them. So you can click on the Twitter handle, and from the Twitter handle you can see what is the link to their homepage, or what is the link to the finance page. So clicking on the stablecoin.finance page, first thing that you notice is it is not giving any information. It is directly asking your wallet connection before it even shows you what is the information. That is another alarming factor, because it's not displaying what it is able to offer you, and it is asking you to connect your wallet. I'm not going to connect my wallet without even knowing what is on offer in the first place. And then if you scroll through their Twitter feed, you can see that they're talking about audits. They're talking about how their code is audited, but people have asked for third-party audit results, and there's absolutely zero response. So we are not going to be actually doing that as well. All of these are alarming factors. Now let's look at Tenfi, which we ultimately selected. Tenfi has got social profiles, it's got an official site, and it's got a Twitter handle. And if we go into it, they are basically straight away they're saying that they were audited by Certic Foundation, which I've already explained is one of the industry standard leaders in smart contracts and in blockchain coding, for example. So let's click on the Certic audit, and just to see and read about the audit results, or like what we did with the initial project, right? And here you can see that the audit results have shown that security score is really good. I mean, it's not fantastic, but it's really good because there's zero major findings or critical findings or medium findings, and whatever has been found in minor findings, 2 of them have already been resolved as well. And the social media sentiment is also neutral. Basically, it's not negative, that there's not a strong negative sense against it. Good governance. And they've also done a Twitter feed analysis from Certic as default, what they do with their full audits as well. So anybody spending enough money to do a Certic audit means that they are serious, and the audit results have also come out good. So that's the first, the social profile was the first one. Certic audit and having a good Certic audit is the second one. So these are 2 factors that are helping us. And if we go into the audit, and if we go into the Tenfi vault itself, it's showing a default, it's showing a decent percentage where the single asset APRs are about 50%, and the multi assets are about 800%, 700%, which is still decent. It's not in like insane 10,000 percentages or 1,000 percentages. Again, going into the Twitter handle, finally they are now competing in the MVB3 program. So MVB3 is the most valuable builder program that Binance runs on a quarterly basis. And the names that are there are recognized. I mean, there is it is one of the most reputed programs that Binance Smart Chain runs for encouraging more DApps to come into their ecosystem. So Tenfi Finance have actually applied for the Build 3 because it's the third version of it that is running. So again, this has been running for nearly about 7 or 8 months, and some of the most famous names that we know of today, DApps that we know of today, have come as part of this Biddle program, or at least have been participating as part of this Biddle program, where the benefits of participating is, first of all, is a recognition. Second is that BSE will directly give a grant for the players or the top players, and they will also help in getting some of the audits done, etc., for example. So one of the things to note is that in our last episode, in episode 32, we talked about Autoform and Beefy Finance. They were actually the top 3 finalists of the first MVB1, where the most valuable builder, the top 3 finalists were Beefy Finance and Autoform. Now, why do we keep talking so much about what not to invest in? Because it's something that people would have understood in the first place, right? Not exactly. I mean, regardless of how poor these projects were, or how poor these projects are, there are still people who still fall for it. So for example, 2 of the most famous loots or famous rug pulls, I would say, are Iron Finance and Polyeld. They resulted in like millions and millions of dollars of losses for investors overnight. It's probably on 2 of the biggest DeFi hacks, I would say, in the recent times. And that was a result of a lot of things like poor code, incompetence, rug pull, layered yield farming, honey traps, whatever, all of these things that we talked about, they were practically displaying all of it. But the point was that immediately after the rug pull happened, immediately after the loss of millions of dollars, they just launched a new project. They just even kept the web page exactly the same and launched it as a new project, and people still fall for it. Like for example, Polyeld, they launched it as ELD V2. I mean, the V1 was such a global massive failure, and they launched it as a V2, and they offered like thousands of percentages of APR, and people still went for it. And again, it started with about $320. Now it's sitting at about $14 in a span of 2 or 3 weeks, basically. So this just to show you that people, their greed is that it will not stop them from going back again into the same project. That's why we need to be safe. ELD token, for example, the original token, started off at about $1,500 at one point of time in June, and on 27th of July, it was about $25, and suddenly overnight it fell to $0, completely wiped off. And they called it so many things, but it was a classic rug pull in my view. They were calling it as an exploit or a code has been exploited, but we've talked about it often that some of these projects, they probably even plant these so-called exploits, and they can probably utilize it or they can exploit it themselves. Iron Finance is another example. They fell from $57 roughly to about in one day, overnight, from on 16th of June to 17th of June, it just fell overnight to $0 from $57. So millions of dollars again was wiped off, and again it was completely incompetent code. But they just restarted the same token again with a new token called ICE, and they just kept the same website app.iron.finance, and $350 million again, more people have just gone and invested it. So, and these are all classic cases where people keep trusting the same token again and again, and they just keep exploiting people's money. And started at about $3.6, and now it's sitting about 10 pence. 30 times it has lost its value. Nearly 30 times it has lost its value from the initial investment. But that doesn't stop people from putting more and more money into it. So again, these are some examples where people they just keep falling for the same scenario or the same projects over and over again. It's like chit funds just moving to the next building practically, and they're still able to freeze projects. So let's simplify the safety rules. Make sure that the project is audited. Review the audit, read the audit, read it for a security risk. Make sure that they've resolved the security risks that are highlighted. Just because the project is audited and they're just putting it as a badge of honor saying that we are audited, people just assume that the audit is always good. Audit is not always good. Audits are just explaining that the technical code is validated and there are lower chances of ruggable code involved. But it still does not guarantee, even if a project is audited, does not guarantee that it's going to be good. So the safest thing to do is to stick to an ecosystem that you're familiar with, an introduction of tokens from an ecosystem that you're familiar with. For example, an IDO an IAO or initial coin offering, or a partnership with an ecosystem that you trust. So for example, I'm going to be sharing two of the ecosystems that I trust. My recent tweets in August were 3 decentralized projects about King Finance, KRW, C98 and BLS, which is the new token in NFT. All of them had given more than 200% return of investment. In fact, King token had given nearly about 4 or 5 times investment, and C98 had also given about 5 times the investment in a very short span of time. And all of them came from trusted sources. My most trusted decentralized exchange, 2 top exchanges I would say for researching and investing in new coin are PancakeSwap Finance, which is in Binance Smart Chain, and Vault Finance, which is in Binance Smart Chain and Polygon. And to a certain extent, I also rely on apeswap.finance, which I've explained in episode 32, for both Binance Smart Chain and Polygon. But apeswap sometimes introduce projects without too much research as well. They practically take on all partnership, is what I would assume. So I wouldn't take all of the partnerships. I take it with a pinch of salt. But with PancakeSwap and Vault Finance, PancakeSwap's main introduction, not the ones that they do an auction and they pull partners in, that is basically like an advertisement. So we are only talking about the main partners. One of the reasons is, for example, if you take Vault Finance, they're introducing after BLS, after the 1000 blocks, they're introducing another token, which is RAN online token, which is a raw token. And in that introduction, if you go and actually read their Medium article that they have written, they explain about the article, but the most important point where you need to be focusing on is that they highlight the fact that how they are locking in the liquidity pool, and how the locking of the liquidity pool means that the chances of rug pull is minimized or is practically negated. And also the fact that apart from the code being audited by a third party, they are also, their own technical team is vetting the project that they are going to be investing in, or vetting the project that they are going to be presenting to you or partnering with. So that is the assurance that they give you when you go with a trusted ecosystem, or when you go with an introduction from a trusted ecosystem. That's the assurance that you get, that it's not going to have a ruggable code, or it's not going to have a scenario like we explained before, where Iron Finance or for Polyyield, for example, where they've literally fleecing the customers or fleecing the investors out of their money. So that's the easiest option. Just stick to known ecosystems. If you trust another ecosystem, stick to that ecosystem, or stick to those known ecosystems, and don't take too many risks in crypto, especially with decentralized finance. Don't chase after too high percentage APRs or APYs. So there were a few comments in Twitter as well asking for a detailed demo or a quick demo on Vault Finance, because we had done a detailed demo on Pancakes Finance for Binance Smart Chain. So we'll do a quick demo on Vault Finance. So we'll start with Matic or Polygon ecosystem. So I have about 10 Matic in my Polygon ecosystem. So what I'm going to do is I'm going to go to Vault Finance, app.vault finance, select Polygon and click on connect wallet. And I'm going to connect it to MetaMask. So in most of my videos, I've been showing MetaMask because that's a safer wallet, a DeFi wallet for the computer, for the browser extension. So I'm going to select Vex Poly and I'm going to transfer 10 Matic to Vex Poly. So for 10 Matic, I get about 10,000 Vex Poly in today's exchange rate. So obviously the fees is very negligible, and click on OK. And in about 30 or 40 seconds, you will get confirmation that the swap has been done. So you go to the pool instead of the form where you're providing liquidity, you go to the pool and you can see the liquidity pools that are available, and it shows you your Vex Poly balance. So you click on approve and you click on confirm. And once you have confirmed it, the stake option will be available. And once you click on stake, Vex Poly gets staked into the farm. That's it. It is now staked, and you will be getting rewards from the Pirate P token, which we have now invested in. Now let's do the same thing for Binance Smart Chain. So again, take Vault Finance and select BUSD now. Instead of Matic, we're going to select it from BUSD to WEX. So the Vex token is on the Binance Smart Chain, Vex Poly token is on the Polygon chain. So we're going to take about $20 and we're going to convert it to Vex. Again, in today's exchange rate, we're getting about 3,280 Vex tokens. Click on confirm, and now we have Vex tokens, WEX tokens on our MetaMask wallet. Now we're going to go to pool again, not into the form, not into liquidity form. We're going to go to pool, connect the wallet again using the MetaMask, and again here BLS token is one of the tokens that I highlighted about. So I'm selecting it and I can see the Vex token, and I'm clicking on maximum tokens. First you click on approve. After you authenticated in your MetaMask, the approve will change to stake, and then you click on stake. So that's it. It's a very simple process in both Vex Poly in the Polygon ecosystem of app Vault Finance and in the Binance Smart Chain. So the staking process in a pool, single asset pool, means that you are not incurring any of the impermanent loss from providing liquidity to a liquidity pool. So that's the biggest difference, or that's the biggest advantage. That's a safer way of earning money on decentralized finance without incurring any impermanent loss. So now BLS token will start accruing on a daily basis, or even on a hourly basis. You can start withdrawing it as soon as you are comfortable to withdraw it. So again, I'm going to use two more examples on these two ecosystems. So BLS token was launched about earlier in this week in September, and I had tweeted about it saying that I'm going to get into it because it's an attractive investment. So in about 2 days time, it had gone up by more than 100%. And its value was about 5 cents to begin with, and it went up to about 13 cents. Now the total BLS tokens that I was able to harvest, or I was able to get, was about 550 tokens. 550 tokens in about 13 cents was about $71 or $72. And again, in 2 days time, we were able to harvest about 550 BLS tokens worth about $72 at today's rate, or at that point of time. So this is again, a daily APR, as you can see in the yield watch, daily APR is standing at about $25. And this is again because of the fact that BLS token to begin with was about 5 cents, and then it shot up to about 13 cents. Now that is the advantage of investing early and investing in a yield form at an earlier stage, accumulating it, and then you're able to sell it when the prices are going up. So this is another example where you're showcasing the potential where you can earn about $25 roughly. I mean, again, this is based on the amount that I have invested, but roughly about the same amount of money that you can earn about $25 on a daily basis, or even more on a daily basis. And finally, if you are going into a liquidity pool forming instead of a single asset forming, if you're going to incur liquidity, if you're going to face the impermanent loss, make the impermanent loss work for you by putting it into an auto compounding vault, like I had explained in detail in episode 32. So this example, $710 I had invested in Vex Poly USDC, which is a liquidity pool that I had provided liquidity into. There was an impermanent loss. My Vex Poly had gone down significantly, but because of the fact that I was expecting the Vex Poly rates to go up, it acted as if I was trading on a 24/7 basis. I was trading my USDC to my Vex Poly. So My current USDC is about 500 USDC, whereas I had invested only about $350. But my VEX poly has come down, and this is what I wanted to do. I wanted to trade, but I did not want to spend the time to trade it, so I just put it into an auto compounding vault. And from my initial investment on the 31st of August to about $710, now it has gone up to about $1,010 in about 4 days time. So in 4 days time, the auto compounding vault has also increased my total value from $710 to $1,010, and I've got about $150 in USDC converted. So if I want to now trade the whole thing off into $1,010, I can do it, or I can keep my VEX poly and take my $150 profit out of the liquidity pool, and I can take it out and withdraw it. So now I have used the auto compounding vault in the liquidity pool farming. Even though I have incurred the impermanent loss, I've still achieved a $300 profit on net profit. So finally, there's two projects, or there's one project that I wanted to mention about, which is called PairsApp, which has a token called Pair. It is on both the ecosystems, Binance Smart Chain and Polygon. That's what makes it attractive at this point of time. Reason being, PairsApp is, if you've seen my episode 32, you will see that I mentioned it about my auto compounding vault, one of my successful investments in auto compounding. But their roadmap looks really decent. I mean, they're talking about launching Zap centers, they're launching NFT collections. They are thinking of getting their own DEX practically. So they have an ambitious roadmap ahead of them, and their partnerships are also really good at this point of time. They are partnering with Vault Finance, and they're partnering with so many other DEXs at this point of time. And they are also branching off into multi-chain. So they are in they were launching in Polygon ecosystem, and they were branching off into the Binance Smart Chain. But that's what makes it attractive at this point of time, because their Polygon price is about $1 roughly, and the same Pair token, which has got a 60 million circulating supply, which is deflationary as well, because there is a 2% burn tax on every transaction. So which means that the total supply is always going to keep coming down, and it is going to be lesser and lesser at every point of time. So they created a bridge, third-party bridge, or they partner with Evo DeFi for a third-party bridge, and the bridge had to be stopped or paused after a few hours because of problems that they ran into. So which means there isn't enough liquidity on the Binance Smart Chain. So even though their intention was to have a single token of Pair on all the chains in parallel, their Binance Smart Chain Pair token is about $6. It's the same exact token. It's just on a different chain. Right now, they are not able to establish the bridge. Because of the absence of the bridge, there is a price difference. And that price difference has resulted in the liquidity pools, or the pools, having higher percentage, like thousands of percentages in terms of the APR percentage. Now, this is a bit of a risky investment at this point of time. So I'm going to provide both the links. As soon as the bridge gets established, or nearer to the bridge gets established, the prices should normalize. But at this point of time, this is an investment where there is a potential to make short-term money out of it. Again, this is one of my long-term investments that I would probably invest in more when the price normalizes. I do expect the price to come down as soon as the bridge starts, or as soon as the bridge is established. But till that point of time, even with the single Pair token, you're getting about roughly 2,700%, which is a good enough return of investment with a deposit fees of 0%. Again, tread with caution. Like I said, the Pair token, as soon as the bridge gets established, it's going to be a single token across all the ecosystems, which means that the 60,000 supply is distributed across all of the chains. And this is just an investment opportunity that I just wanted to highlight. And be a bit careful, because it will come down. It will fall down to $1 is what I expect. Again, all of the DeFi passive income options that I have shown today, I've talked about today, I've covered in detail. So if you want the basics of liquidity mining, the basics of decentralized finance, for example, covered in episode 24, and how to set up a wallet if you've never done a DeFi wallet, I've explained it in episode 25 with demo of Binance Smart Chain, of PancakeSwap, and then how to use Trust Wallet on the mobile, how to set up Polygon ecosystem, Polygon DeFi wallets. All of that I have explained in detail in those episodes. And how to move funds to your DeFi wallet, again, they are explained in all of those episodes. And if you're in India, for example, you can transfer from WazirX to Binance with no fees in USDT, which is Tether coin. And then from Binance, you can withdraw, or you can convert your USDT to BUSD and you can finally withdraw your BUSD to your MetaMask with no fees. So registering for WazirX, I've explained it in episode 03 with a detailed demo. All of these links are given in the description. And registering for Binance, if you're not in India, you can directly register for Binance and you can directly buy it in Binance itself and transfer your BUSD to your MetaMask and start doing DeFi trading. Again, I've shown it in episode 25 in detail. So finally, a word of warning. Remember that the basics of crypto that we've talked about, all of that applies to DeFi as well. So do not put your essential funds into crypto or any other investment for that matter. And always keep realizing your profits. Unrealized profits, how much ever you make in unrealized paper profits, the paper profits are useless till the time that you realize the profits. And make sure that you take the profits out into real life. Do not keep everything as an invested amount. Don't keep reinvesting all of the amount that you're realizing, because then there is no point in realizing profits. So take some profits into real life and go and use that money in your real life. And don't overdo decentralized finance just for the sake of doing decentralized finance. That's the most important point. People get into projects that they don't understand or believe just because there is a high yield opportunity there. So always put safety before profits. That's the one thing that we've been talking about in our videos again and again. Put your safety before profits and make sure that you're not overdoing anything for that matter. Not just crypto, but even inside crypto, don't overdo decentralized finance as well. So again, I just wanted to summarize all of the things that we talked about in crypto before we end the decentralized finance series. So in the next videos, we'll start to go into further topics like NFTs and other topics that we have not covered so far. So hopefully this was useful to you. Thank you. Until next time. Bye.